Welcome back to the channel. I hope you're having a great day wherever you are around this beautiful planet of ours. It's your home of cycle analysis on the stock markets, real estate, and of course, Bitcoin and cryptocurrencies. But while Bitcoin and crypto are relatively dead, we need to focus our attention on the S&P to give us a bit of a foresight as to what to expect in 2023, looking at the macro picture for BTC and of course the stock market. And in today's video, we're looking at the stock market and some early signs that we're noticing in other markets to give us that preemptive outlook for what is to come for end of quarter four, quarter one in 2023. Now we have big fundamental announcements coming up this week in the US, but before we look at that, make sure you like and subscribe to the channel for your macro cycle analysis. Let's dive in first, starting with the headlines that are coming up this week. We're looking at Forex Factory here just to give us those major high impact announcement events. These little red events here are the sort of events that tend to bring a lot of volatility to the market. Without doubt, over the next 48 hours, all of the headlines are going to be around volatility. Now, this is in my time zone, but of course, this is going to be the morning of Tuesday for the guys in the US, and of course, the afternoon for everyone in Europe as well. Nice and late in the evening here. This is the CPI data that is coming out this week. And so the forecast is 7.3. What we're anticipating is if the CPI data comes in lower than the forecast, this is going to send the stock market shooting upwards. And right now, we've just had a rejection of our bear market downtrend. So it's almost all too obvious that the market has hit a rejection point and fallen, hit another rejection point and fallen. Now we've hit this for the fourth time, starting from the first point here at the all-time high. We're at that fourth point now. And so you've got a lot of people that are trying to load up on short positions, basically betting on the market going down. But if we get a positive outlook here, and even if inflation is still high, as long as it comes in at or under this particular reading here of 7.3%, it has the possibility of pushing this market up again, breaking that bear market downtrend, potentially breaking the current top that is in at the moment at around 4,100 and sending all of those shorts back to the cleaners, getting liquidated and pushing up hopefully past the 50% level and to our target level of around 4,200 points. Now we all know if the market hits that 4,200, that is going to be a very strong sign as it overbalances this previous run, meaning there are more buyers prepared to buy the market than there were in the previous move up. And it means in terms of time, we're nearly there. We're looking around 2 more days now to reach our time target of approximately 61 days. It would mean that they have pushed up this market in the same amount of time, but even further. So we're a little bit out from that point right now, approximately 250 points in this market. And so everything now rests on what is coming up with this CPI announcement. So that's the first big piece of news coming up this week, how we're seeing it in the market. Of course, that it has now found some support at around 3,900 points, and the upside, should that news come out positive, meaning under the forecast of what is there, then we'll probably see this market start to head up into a possible Christmas rally, as today's the 12th and that news is due to come out on the 13th, and that's only just a week out from Christmas. So if we don't get the positive news, maybe the inflation is slightly higher and we see the market start to trend downwards, we still have a couple of safety net points here. The first is 3,800 points. That's our halfway between the current run up. This has been a very strong run out of that October low, the October low that we were talking about on the channel, looking specifically here as a time in the market for the bottom to come in at around this point. Underneath that, we're still left with the upper end here at 3,600 points. That was the previous low of June, where the market just touched under it in October to 3,500, which is also a major 50% level. That's here at 3,500. And then to the final downside here, I'm looking at around 3,200, which were previous support levels. So all in all, there is still a lot of support, a lot of macro support to the downside if this data does not come out favorably or just not as punchy as what the market is expecting. 3,800 points as a support, 37, 36, and 35 are all very strong levels for this macro support. And the worst case, 32 is still in play here as well. So there's still a lot going on here for the S&P. If the numbers do come out relatively well, probably going to get that bit of a short squeeze here and just destroy a lot of people in the market who are hoping for downside, getting on the back of a trend that has been in play all year on the S&P. Now, the next headliner news is the federal funds rate, and the expected or the forecast here is 4.5%. 4 is what it's currently at, and they're anticipating a 0.5% rate rise. So if there is a 0.5% rate rise, that can still be good news for the market because it's essentially what the market has been expecting and what the market has been anticipating and factoring in terms of price. So this can be a good thing here, 4.5%. You can see if we scroll up, that's the forecast, and the actual, as long as it's at 4.5 or under, that could then send this market skyrocketing and breaking through all of this resistance that is overhead at this current time. Now, another thing to layer on to this potentially positive news is the Dow Jones. So just looking at the trend of the DJI, the top 30 stocks in the US. This particular market here, if we throw on our swing indicator, you can note that we have previously just taken out the monthly swing top. So this was the monthly swing top of the previous months here in August, whereas the S&P, we have not gotten past that August top. So we're lagging what the Dow Jones is doing. But if this is any indication of the potential strength in the US market around all of the negative news and the negative sentiment and the fear of inflation and war and everything else going on in the world, this is doing the opposite. We have now had 2 green months taking out the previous top. And if this is some positive news, it comes out through December and we get another move above the November top, we would have 3 months up. We have 3 green months up. In almost 100% of cases, when we have 3 green months, basically 3 months up in these indices, the market has gone on to a new bull market. That's over the course of the last 60 odd years. The only time that has not occurred was in 2001. This is the period through 2001. We've got the October, November, December bars with a red month in January, but still a slightly higher high. So that's some good news there. But then the market collapsed from that point moving forward. Now, this is an area that we looked at just in the previous video here. So go back and check that out. I'm going to leave a link for it up here at the end of this video. So stick around and of course, like and subscribe to the channel. But this video goes into more detail about how much worse Bitcoin stock markets can get into 2023, looking specifically at examples like this. So if you're unsure of all of the noise and the talkings of the news and the talking heads out there that's coming up, go back and check out that video that I'll leave here at the end of this video. But the most important thing about this move up, even though there were 3 green candles, this one is actually an inside bar using bar analysis here, again, bar analysis, and then 1, 2, 3 moves up before we got this peak and a dump. The good news about it is this particular low that came in was almost at the previous prices. And this is what we were looking at in that previous video, going through the whole 90 years of history of how much further or how much worse the market can get. So we do have a pretty good signal here, a slight move underneath those levels, and then the market went on for that next bull market. And this is what everyone is fearful of here. But the main problem that a lot of people are fearful of is they believe some sort of GFC is coming, some sort of bigger move down. But in fact, our time cycles just don't show that this is in order just yet. This will come in years to come, but it's not time for this particular move yet. Now let's keep following on with the hopium of the market. The first thing is around the market sentiment, the psychology of the market. Remember, lows are always formed in negative news. They have to be formed at negative news. There's no other way around it. You cannot form a market low on positive news, because if there was a lot of positive news, a lot of positive sentiment, positive feeling from investors, a strong index reading for greed, you cannot get a low. It's impossible to get a low when everyone is so confident on the market. When people are extremely confident in the market, that's usually around tops. It has to be that way. And the bottoms have to be formed around a whole lot of negativity, more and more bad possibilities coming out in the world, but the indicators start to show you otherwise. So the market sentiment is still very, very bearish, negative. People expecting lots of dumps like we have seen in the past, talking about black swan events that are possibly coming. And if in fact you can't have black swan events that are possibly coming, because that's the reason why they're called black swan. You just don't know. But looking at this particular hopium piece here, the Dow's clawed back 70% of its losses in 2 months. That was its 9th quickest retracement in the last 122 years. So this is one of the quickest moves out of a low period for the Dow. And if this is any sort of indication for something like the S&P, what can come next, we would be expecting the all-time high to hit first before we see any sort of lower prices, in particular going below any sort of lows that were set during the pandemic. So anything under around 2,500 points here for the S&P. Question out to you guys, do you think, what is your feeling and understanding of the market? Do you think we are going to see an all-time high before we would see lower prices? Anything under around 2,500 points? Let me know in the comments down below. Do you expect the prices to go higher here or underneath these particular lows? Now, if you're expecting the all-time or prices to go up first, this would possibly be a reasonable area of accumulation. Obviously, keep track of where these lows come in. Should we break from 35, start to look towards 32. As you can see, these are pretty key levels during the pandemic. So this is the market coming out of the pandemic, testing it, and prior to the pandemic getting rejected before that drop. Back to the Dow, and after other quick retracements of at least 70%, the Dow showed a strong tendency to show above average 12-month returns. That was a miserable failure in 2001. Now, we've covered why 2001 is not the right timing for this particular market. Obviously, keep track of these levels of 27,500 and some of these lows here at 29,500. And we can go all the way back into Dow Jones history, and I suggest liking and subscribing to the channel and going checking out this video here. But once these particular monthly swing tops begin to break on the way up, you can see that we go on a new run. You have some minor fake outs at times. However, in the vast majority of cases, once these highs are broken, the market continues up for many months, if not years to come from that point. Now, the only thing is some of these minor moves to the upside can be protected with stops underneath the market. So keep track of where this stops, so where the market comes back down to those levels. Looking at it from the major cycle points, you can see the 87 peak. This is just looking at the swing chart. As the monthly swing started to build at this level, once they're all broken, the market is on and away for the next bull market. You can see here as well in 2008, so this is the global financial crisis. You can see the market breaking down, lower tops, lower tops, lower tops. And as soon as this market breaks out in 2009, we're off to the races again for a new bull market. So that's the question right now. It is still early days without confirmation, but this is part of being an investor. If there are some early signs, if you want to get in early, at least these are showing us some good positive signals. Now, of course, what you saw as well is that you do see some retracements. The key here is to figure out and to watch the chart to see whether these retracements fall higher than the previous lows or around those lows to form a base, continue to form that base, or if they break down. And that's going to be the key indicator. Do they hold up and start to move again? That is going to be very, very positive for us because that would already give us a higher high. So we're getting some early signals on Dow Jones, which could also follow through to the S&P. And of course, if investors are feeling riskier with the positive sentiment within those spaces, maybe that can give us a little bit of a kick on with BTC. And right now, Bitcoin is starting its stair-stepping movements towards that 17.6. It's not there yet, And there is the possibility of further downside because we haven't had any macro closes above, first up, 17,600 and secondly, 18,600. The key here is to get above this step here, step 4. That's my Wyckoff bullish flip bar at 20,675. And like you've been following here on the channel for many, many months now, this has been a key level for me, 20,700. If the market can get above that, we are looking very good for BTC within a solid setup of a trading range. You can definitely kiss your 10K goodbye should we get back above 25K, which is that peak there in August. And you're almost sure you won't see 10K should we break back above these levels here at around $21,500. Now, as for the short to medium term, you can see that we're setting up here for a lower swing top underneath previous support levels, which is quite a bearish sign. So if that is to hold true, hold in play, we'd have to favor the bears and look towards further downsides for targets here. But of course, we need to see what happens with the S&P this week, the Dow Jones this week, and of course, see if Bitcoin can hold these levels here at around 15.5K, set that base up to try and reclaim 17.6, which would then be setting this up in a nice Wyckoff accumulation pattern or a continued Wyckoff accumulation pattern. Should we get back above that 17.6, which would then set up the trading zone yet again for between $17,000 and $25,000. And we could almost kiss that $10,000 goodbye. Talking about goodbyes, we'll save the kisses for another time, but you can check out the videos popping up here on your left-hand side, looking specifically at yesterday's video here. Go and check that video out, plus all of this other content here with macro data. Make sure you do like and subscribe to the channel. Links are all in the video description. I'll see you guys at the next one. Until then, peace out.